The theme this time is GMO GlobalSign Holdings full-year financial results for FY 2025. Our mission isn't just to verify the numbers, right? We also want to uncover what's driving this incredible performance and what the company's future potential looks like.
Exactly. Financial statements are basically like a company's health checkup report.
A health checkup, I see.
Yes. This time, the results are like getting a grade of A for the diagnosis. But what we really want to dig into isn't just the outcome. We want to understand why they're so healthy and whether they can maintain this health in the coming years by analyzing the company's core qualities.
Then let's get right into examining that core. Starting with the FY 2025 actuals, sales were 20,670 million yen, up 7.9% from the previous year. Operating profit was 1,475 million yen, a substantial increase of 18.3%. What caught my attention is that profit growth is far larger than sales growth. What's going on there?
That's a really good point. The operating profit growth rate of 18.3% significantly outpaces the sales increase of 7.9%.
Yes.
This indicates that it's not just volume, but also the company's profit margin that's improving. A very strong sign of increased earning power.
Wow.
The materials mention profit increase driven by the optimization of development bases and personnel allocation. But what that really means is they're cutting unnecessary costs and building a leaner, more muscular management structure.
I see. It's not just growing bigger, but becoming more efficient and smarter at earning. Plus, they've achieved over 100% of the initial full-year forecast, 101.3% in sales, and 102.8% in operating profit. They're exceeding their targets pretty convincingly.
That's right. Growing sales combined with improving profit margins is a very healthy and ideal growth model for a company.
And who's leading this impressive growth? GMO GlobalSign's three core segments are digital certificate and e-signature, cloud infrastructure, and digital transformation. Today's report particularly focuses on the two fastest growing ones, digital certificate and e-signature, and cloud infrastructure. Let's start with the backbone, the digital certificate and e-signature segment.
Sure. This segment alone generated over 13,000 million yen in sales, making it the company's main pillar. Among its key products, the company specifically highlights GMO Sign and GMO Trust Login.
Wow, the growth of these two services is incredible. I was surprised when I saw the figures. GMO Sign grew by 31.3%, and GMO Trust Login by 33.3%. Both have increased sales by more than 30% year over year. Honestly, I used to think the digital signing services were already mature markets, so I didn't expect such growth potential. What's driving this?
Well, it's partly because the overall social digitalization has been progressing more thoroughly.
More thoroughly?
Exactly. Before, only specific departments or certain contracts were digitized, but now, entire companies and their partners are adopting digital solutions, what we call broad-scale digital transformation, or DX. Riding this wave is at the heart of this explosive growth.
I see. So it's about shifting from a boom to building the infrastructure for long-term use.
Precisely. Let me explain a bit about digital authentication. That's a key part of this.
Yes, please.
In simple terms, it's like an ID card for the internet. You might have seen URLs starting with HTTPS.
Yes, I've seen that.
The S indicates secure communication, which is made possible by this technology. GMO GlobalSign holds the #1 domestic share in this domain and ranks #4 globally. Solid positions.
So they're #1 in Japan and #4 worldwide. That's impressive.
Exactly. And that leading market position isn't just about rankings, it's a huge barrier to entry. Trust built over time makes customers prefer companies they already rely on, which makes switching to competitors difficult. That creates a strong moat, an entry barrier that's hard for rivals to breach.
So, the trust once established acts as a shield protecting the business.
That's right. And services like GMO Sign are subscription-based, meaning once a customer adopts it, The ongoing retention generates steady, recurring revenue, which is another major strength.
So recurring revenue means stable monthly income, right?
Yes, similar to a smartphone subscription fee or streaming service.
I see. That makes sense.
Once you get a contract, unless the customer cancels, revenue keeps flowing regularly. Even if each contract is small, the cumulative effect creates a resilient foundation for the company, especially in turbulent times. For example, I recently renewed my apartment lease using GMO Sign. I didn't have to go through the hassle of physically visiting the agent with a stamp. I just completed it via smartphone.
Oh, really?
Yes, it's really changed how people do things. More convenient, frictionless. That's a big part of the 30% plus growth.
So the main business is rock solid, with flagship services growing over 30%. But that's not all. The other segment, cloud infrastructure, is also performing remarkably.
Absolutely. The segment's sales surpassed 7,200 million yen, up 9.7% from the previous year. Particularly noteworthy is the CloudCREW by GMO service, which alone grew by an astonishing 41.8% from the previous year.
The overall cloud market is huge. I heard it's projected to reach about 19 trillion yen by 2029.
Yes, that's correct.
The market is expanding not just in server rentals, but also in managed services like CloudCREW, handling everything from specialized management and operations. That indicates companies are moving beyond just using cloud. They want to leverage it more strategically and efficiently.
Precisely. The 41.8% growth is a strong reflection of that rising demand, and it's a very promising sign for future growth.
Putting everything together, from past results to current operations, it's clear that business is thriving. But as an investor, the biggest question is this momentum sustainable? And will it continue into the future? The key to answering that lies in the company's long-term strategy.
Absolutely. While some IT companies are uncertain about the outlook due to the rise of generative AI, this company explicitly states it has unique strengths that AI cannot replace.
And those strengths primarily revolve around digital authentication, right? That trust technology can't be replaced by AI-generated content or images.
Exactly. This is a crucial point. As AI evolves, distinguishing authentic from counterfeit becomes increasingly challenging.
That's right.
In such an environment, the value of verifiable trust and authentication will only increase. You could say this company is commodifying trust itself.
They're also preparing for future threats, like quantum computers that could break current encryption. They're already working on quantum-resistant cryptography, or PQC. It might sound a bit like science fiction, but they're actually taking proactive steps.
Yes, while practical application is some years ahead, security always needs to be prepared for future risks. Announcing that they're already working on such technologies sends a very strong message. We will safeguard your future security. A trust barrier competitors can't easily copy.
That's a very strategic move.
It's a clever way to demonstrate long-term stability and competitiveness.
And they've also significantly strengthened their shareholder return policy, which is great from an investor's perspective. But I wonder, are they raising dividends too much? Will the company still have enough resources for growth? How should we interpret this balance?
Great questions. The cleverness lies precisely in how they structured these policies. Previously, they aimed for a payout ratio of 65% of net income.
Yes.
That means they intended to return 65% of their profit as dividends, a quite high payout ratio.
65% is indeed substantial.
The recent change adds a new standard, a dividend on equity, or DOE, of 4%.
DOE.
Dividend on equity. It's a metric that shows how much dividend is paid relative to the company's net assets. Unlike profits, net assets tend to be more stable. So setting a dividend floor based on assets helps ensure stable payouts even if profits fluctuate.
So now they're basing dividends on both profit and net assets, two different measures.
Exactly. The key point is that the company has now committed that dividends will be at least the higher of either 65% of net income or 4% DOE.
The higher of the two.
That's right. This directly addresses your concern. When profits are high, they follow the payout ratio of 65%, sharing the growth with shareholders. But if profits temporarily dip, the stable net assets support a minimum 4% payout via DOE. It's a strong commitment to providing both growth-based and stability-based returns simultaneously.
That's impressive. If profits grow, dividends can increase. And if profits fall temporarily, the stable assets support dividends, giving shareholders peace of mind.
Exactly. It's a very strategic balance, both aggressive when the company is doing well and defensive when needed.
That kind of policy is really reassuring for shareholders.
Totally agree.
To sum it all up, in FY 2025, the company delivered record high sales and profits, beating their own forecasts. Driven by rapid growth in services aligned with the wave of digitalization, like GMO Sign and CloudCREW, business is really on a roll.
And looking ahead, they're building a core foundation based on trust, which becomes even more valuable as AI advances. Nothing replaces reliable verification when distinguishing real from fake. Plus, they've adopted a shareholder-friendly stance with strong, stable dividends.
It's a very well-rounded strategy, strong current performance, promising future growth, and a solid commitment to shareholders.
As the company puts it, 2025 was the year the groundwork was laid for the next leap forward. Their solid earnings, growth strategies, and shareholder policies all seem well balanced.
We deep dived into GMO GlobalSign's financials today. It's not just about good numbers. Behind the scenes, the business's strength and clear future vision really stand out.
And finally, one last thing to consider. At the end of their presentation, they declared, "We aim to contribute to the development of society with trusted infrastructure and challenge to become #1 in global market share in this field." Think about it. In the future, as AI progresses and it becomes harder to tell real from fake, the importance of proving trust will only grow. They're betting on the value of trust itself, basically wagering on trust as a key global asset. Imagining other scenarios where proof of trust will be needed can be pretty interesting too.
We change experience with IT. GMO GlobalSign Holdings.